Hi everybody, Joel here with Ovation Insurance, and I just wanted to share this quick update heading into 2022 of what the hotel insurance market looks like. I know it's been a very challenging year for a lot of us, so let's just take a look here and see what is going on, what we can do, how we can hopefully fix some of this. Okay, so first and foremost, what is going on exactly? So basically, the short answer is COVID, but it's a little more complicated than that. And there are a few other things other than COVID that's affecting this too. So hospitality obviously has been one of the hardest hit industries by this pandemic. Obviously, there's really nothing new to talk about there. And because of that, rates have been locked up and or they have increased. I'm sure you've seen that. There's a little bit more to that as well, which we'll talk about. And many insurance companies have left the market altogether. They've just said, you know what, insurance is a business, and they are finding that in the current market, they're just not able to be profitable. And so they've left the market, which has left a smaller amount of carriers to work with all of the hospitality risks, and here we are. And so that's been a challenge as well. And honestly, with so much unknown, it's hard to know what's next. And because of that reluctance, because there's just not enough information to know what to do, that's slowing things down as well. Okay, so what are the factors that are specifically affecting hospitality? Aside from COVID, I'm sure you're all aware of the exclusions for viruses, pathogens, and so forth, but property rates. Local claims have moved rates up regionally. For instance, in the Midwest where our agency is, tornadoes there aren't necessarily going to be a problem for, the state of California, and the earthquakes there aren't going to be a problem here. But nonetheless, those regional claims have increased across the board. And then, of course, for a number of reasons, labor has increased. The cost of labor has increased. Material costs have increased as well, and that's pushed values up, which has made it even more difficult. And then reinsurance. This is something that's kind of below the surface that I haven't really seen a lot of people talking about, but reinsurance companies have raised their rates as well. So basically, the way reinsurance works, think about it this way. So let's say you have a $1.5 million building, okay? So your insurance company, the one that you're with, would insure that building at 1.5 million. However, behind the scenes, your company would insure the first 500,000 of the building. Then the reinsurance company would carry the rest. It's all covered, and if there's a claim, a total loss, your company is going to pay for the whole thing and make sure you get what you need. But because they can spread out that risk to the reinsurance company, that keeps rates down across the board. Well, what happened was, for the first time in several years, the reinsurance companies increased their rates. And so when that happened, that hit the whole board. And so now all rates are going up because of the reinsurance companies increasing their rates. So I'm sure there's questions on that. I'm happy to answer them if you'd like to schedule a call with me. But for right now, let's go ahead and move on. The last thing, which we're going to talk a lot more about in a bit, Google reviews. These are carrying more weight than they ever have at any point right now. Just something to think about. Okay, so what are the factors affecting rates specifically on your building? So first and foremost, the condition of the building, the parking lot, the property. You're going to want to make sure everything is up to date and improved. And if it needs repaired, make sure that the repairs are done in a reasonable amount of time. Adequate lighting, of course. This is a big one. Room doors on the inside of the building versus the outside. Interior doors, frankly, if the hotel has interior doors, you're likely going to get better rates. That's just how it's working right now. The hotel markets are just finding that there's less risk when the buildings are inside. You can lock the building up and make sure that only people with keys can get in. There are specific reasons to that, which I'm sure you understand, but chances are if the rooms are interior, you're probably going to get a better rate there. Self-closing doors, of course, are going to make things better. Key cards versus keys, you definitely want the key cards. Deadbolt locks, emergency plans posted, yes, even on the exterior door hotels. Annual occupancy percentage. Hotel carriers are liking to see you at least above 40. If you can be above 50 or 60% occupancy for the year, that's going to be probably the best place you can be, especially 60. That's going to give you your best, if not more. Make sure your franchise requirements are hit. I know those change sometimes, but make sure that everything's being done appropriately for that. Security, of course, alarms, cameras, make sure your sprinkler systems are up to code, all that. Insurance carriers do not like long-term residents in the hotels as much as they like nightly customers. So if you've got long-term residents in there, might be something to think about to transition more into a nightly thing. And then of course the Google reviews, which again we'll talk about in a bit. So what can we do? All right, so first off, if we're just talking straight up coverage, change your coverage. You can increase your deductible. You can discuss limits with your carrier or your agent. You want to do what you can to increase the ratio of nightly guests versus long-term guests. Kind of on top of that, which is something I'm just now starting to see, carriers are liking the room rates to be higher. So I had one ask me for rates of $125 a night plus. I know that's not always possible in either the area you are or the hotel that you're in, but they are looking at that. At least some of them are. And then create an improvement timeline. I understand some of this stuff, you might look at that list that we just went through and say, I've got 8 things I need to do here. Well, one thing that some of your carriers might be able to work with is a timeline. Say, okay, look, I know that these 8 things need to be done, but I'm going to do this in January, this in February, this in March, and so forth, and show them that you're serious about taking care of what needs to be done, improving the building, improving your security, getting everything that needs to be done taken care of. Carriers love to see that. That's something that can help your rates too. And then of course, remember, this is not a maintenance policy, okay? This is an insurance policy. So if there are maintenance issues, make sure those are taken care of right away, because if it's due to maintenance, chances are that claim is not going to be paid. So just keep that in mind as well. So what should you put on a service timeline if you're going to do that? Of course, what we talked about, but these are the big things. Roof updates. We've seen a lot of roof leaks in the last 2 years. Make sure your roof is fully repaired and ready, and if you need to update it, please do. Inspections are key. We've found that the more inspections you can get a year, the better things are, the more you can fix, the less issues you're going to have. I would suggest at least an annual inspection, probably more. Semi-annual might be better, but then you can fix and repair anything that needs to be done right away. Switch your keys up from physical keys to key cards, upgrade your door locks, post your emergency paths. Yes, I realize if doors are exterior, that doesn't really make a lot of sense in some cases, but if you've got a second floor, it does. And then upgrade your security. So let's talk about those reviews finally. So these are carrying an awful lot of weight right now, and they are affecting rates. And there are companies that have told me outright in the last few months, we will not work with this hotel because of the Google reviews. So just keep that in mind. You can be losing money. You can be losing thousands and thousands of dollars based on your reviews alone. So my questions for you are you asking for the reviews? Are you responding to all of them, even the negative ones? Are you addressing the problems that they're talking about in the negative ones? I realize some of those negative ones are not going to have anything productive in them. They're just there to rant. I understand there's really nothing to address in that. It's just somebody who wanted to voice their opinion. But sometimes there are legit concerns. Are you addressing those and taking care of? And finally, are you able to automate the process of asking for positive reviews? This is something that we have done very well in our agency, and it's paid off in a big way. And this is something that we could help with as well. Are you able to automate that and even catch the negative reviews before they reach Google and address them before it even reaches that far? And then finally, can you think of ways to incentivize your customers to leave good reviews? And again, that's something that we can help with as well. So what's next? Well, we just don't know. We're going to have to wait and see what happens with COVID. The factors listed, they're not going to change. These are always going to be important. Whether COVID is a factor or not, everything we just went over is going to be important. So just keep that in mind, that this is always going to be something to consider. So thank you for your time here. If you have questions, concerns, if you'd like to get a quote, if you have anything you'd like to discuss on this presentation or the state of the market, please feel free to reach out to me. My contact information is listed here. My agency information is listed here as well. I'm happy to help. I'm happy to answer any questions, and I hope to hear from you very soon. Thank you for your time.